Hi, today we'll be evaluating fitness center's financial model using input sheet, loan schedule, revenue analysis, financial statements, and dashboard. This will help us understand different aspects as well as growth of the business over the 5 years period. Moving to the input sheet, it includes various assumptions, for instance, investment taken from different investors as well as loans. Moving on, this also includes different employees' payrolls as well as different operational expenses incurred by the business as well as capital expenditure. Moving on to the loan schedule, this allows fitness centers to know the interest expense and the principal amount that has to be paid on monthly basis. This will help fitness centers to evaluate and have their cash flow cycle depending upon the principal amount that has to be paid. Moving on to the revenue analysis, this is one of the most important aspects for the business as fitness centers is dependent on advertising budget as well as word of mouth. For instance, if the advertisement budget in this case is increased, the number of members coming to the gym will also increase. Furthermore, if the amount of word of mouth spread is also increased to 50, the number of members will increase, hence the sales of the fitness centers will increase. Moving on to the startup summary. Startup summary shows the funding as well as the expenses incurred by the business. This helps the business to evaluate its expenses, where the expenses are occurring from, for instance, variable and fixed costs. This will help the business to reduce its costs in long term. Moving on to the depreciation table, this allows the business to identify its fixed assets and depreciate them on monthly basis. This helps the business to keep its assets on net book value so that it could be fairly represented on the financial statements of the fitness center. Moving on to the monthly P&L, this helps the business to evaluate its performance on monthly basis using total revenue, cost of sales, as well as gross profit and net income after taxes. Moving on to the yearly P&L, this helps the fitness centers to evaluate its performance on yearly basis using revenue, gross profit, total operating expenses, and net income after taxes. Moving on to the cash flow statement, this will allow the fitness center to evaluate its cash flow using different activities such as operating, investing, and financing. This will also help fitness centers to identify which of the activities is generating most cash from so that the fitness center could help and divide its cash accordingly. Moving on to the balance sheet, this summarizes the assets as well as the equity and liability for the fitness center. This allows the business or the fitness center to evaluate its fixed assets as well as the liabilities it owes and the investors' capital that it has in its business. Moving on to the project evaluation. Project evaluation helps the business to find its net present value using free cash flows. Furthermore, project evaluation also contains the burn rate, which means that how much the cash has to be burned for the business each year. Moving on to the break-even analysis, this helps the business to identify the fixed costs as well as variable costs and to identify the amount it has to earn on monthly basis or yearly basis so that the fitness center doesn't incur any loss. Moving on to the diagnostic tools, this summarizes the financial statements and tells the performance and the findings of the fitness centers. Moving on to the dashboard, this gives the virtual representation in form of charts, which helps the user to identify and evaluate the performance of the fitness centers using different aspects of profit and loss statements, diagnostic charts in cash flow as well as balance sheet. This helps the user to get a better analysis of the business. Thank you.